Hi, this is Jason Fielder with the Daily Forex Report for December 18th. We're going to take a look at the US Japanese yen first. If you notice, we have another overextended bar. Yesterday's overextended bar did not play out in a profit. It actually moved down at the beginning of the session just a little bit and then pulled back and continued higher the rest of the session. If you didn't take the trade right out of the get-go, you probably did not take that trade because it did move higher. Or if you did, you would have been out about 12 pips because that's about what it was if you used a 1-to-1 ratio. Now looking ahead though, we have this overextended trade. We're pretty much at the opening price. Look to buy in at 89.41. It's at 42. This would be a fair price as well. Look to exit this particular trade at 90.02. Using a 1-to-1 risk to reward ratio. That gives 61 pips worth of room for the market to move, but also gives 61 pips profit. And after this long drop and then this strong pullback, we could definitely see the market move up those 61 pips. Now, I am looking for this pair to move as high as 90.83 and as low as 86.07. Now, we're looking for resistance around the 90.00 level and support, looking for it to kick in around 88.60. Now let's switch over to the Euro USD pair. This particular pair had an overextended bar that was triggered at the beginning of the session. If you notice, it did, of course, it did go higher than the previous high, making that a winning trade. There again, the pips there weren't large, it's around 19 pips. So the lower pips I don't necessarily like to trade with the overextended bar because it doesn't give, if you use a 1-to-1 risk to reward ratio, that much room for the market to move. And of course, if you go with a higher risk, of course, then your risk to reward ratio drops below 1, which isn't necessarily a bad thing. It just means that your winners you have to have more winners than losers. Now, looking at this particular session, it went much higher and then closed lower, which indicates that we should be headed down. The bias is, I believe, still to the upside overall, but we could see a pullback. I am expecting this pair to move as high as 1.4842 and as low as 1.4052. Now look for some resistance around 144.35. Look for support to kick in around 141.46 in this particular pair. Let's take a look at the pound. The pound created a overextended trade today. It moved much lower, very quick. We do have this trade that we're looking at. Basically, we're looking to go short at 1.5014 and looking to take an exit around 148.81. That's a potential profit of 133. This would allow the market to move a little bit up and down prior to moving lower. As you can see, the market has opened and has just moved higher during this session so far. We might get a retracement. I wouldn't be surprised at all if this particular pair just continued to move higher the rest of the session. Now, this pair overall is moving sideways though, and I am expecting it to move as high as 157.55 and on the lower end 1.4685. Now look for some resistance to kick in around 151.18 and look for support if it does move lower at 149.15. Now let's switch gears and move over to the US Swiss. This particular pair closed up after moving much lower. It did pull back. This is an indication, this particular bar is an indication that we will be headed higher, if just for a little bit, even though the market has pulled back from the open of this session. I am expecting it to move as high as 1.0956 and as low as 1.0315. Now look for some resistance around 1.0869 and look for support around 1.0713 for this particular pair. I do believe we're going to get a small pullback, but I also believe that this pair is moving to the downside. The bias is definitely to the downside. Now, looking at what happened in the news today, the Canadian dollar had their retail sales released. It was better than expected, only dropping from 0.9% down to negative 0.9%, but that was better than what was projected. Now, the Canadian dollar has their CPI for November being released at 7 a.m. tomorrow. Consensus is that it has dropped from gone up from negative 1.0% to negative 0.5%. Year to date, though, it's showing that it has dropped from 2.6% down to 1.8%, which would be good news for the Canadian dollar. Well, that about does it for today. Until tomorrow, this is Jason Fielder. Good trading.